Hi guys, my name is HTrade and I'm a partner trader of Wesley Trades HQ. Wesley Trades HQ is a free trading Discord community where people can join and you can basically find like-minded people that also want to make a living out of trading. And there's a lot of information here that you can use, especially under the support section. There's a lot of information and education that we provide. Also, there is a strategy that Wes shown. Basically, the strategy that Wes used to trade is also in the edu file section. Here it is. And we also provide free live trading sessions on a weekly basis here in the Wesley Streams section. Alright, so I'd just like to quickly show you this. We have around about 1,500 members and we have a good amount of partner traders. And like I said, yeah, you can join the Discord free of charge. Alright, so let's get started. I would just like to quickly show you something. So my journal, there's a free journal section as well. My journal, I keep up to date on a daily basis with all the trades that I take. Take a look here. Very nice trades. On a weekly basis, etc. etc. So, and also my payouts, which is really cool. So I'd just like to show you the strategy that I've been using in the past few weeks to make this amount. Also, that helped me with my consistency in trading. So let's get started. Alright, so let's go to the charts. Now, I mainly trade on NAS 100. So before we take a look at any of the charts, let me just quickly explain what I'm going to show you guys, just as a quick menu, so to say, or a quick guide on what we're going to do. So basically, I'm going to show you how to look at your direction. So before you do anything, you need to have a sense of direction, or obviously it's also called your bias. Next, once you have your direction, then we are going to look for trades. And what are we going to look for in trades? So before we even look at taking a trade, we first would need a liquidity sweep, right? Liquidity sweep. Right, so once we have our liquidity sweep, now you're going to start looking for your entry model. This all I will explain to you as time goes by, so it's fine, right? Now the next thing is, when you look for your entry model, you also need to keep in mind your TP targets and your TP targets, your stop loss placement, stop loss placement, and so which is basically your money management. At the end of the day, your TP target and your stop loss placement is tied together with your money management. And this is basically it. I'm going to keep this as short and sweet as possible. So let's get started with the directional bias, right? All right. So let's go to this section. All right. So with the directional bias, let's take a look at structure, just normal structure, right? So on the 1 hour time frame, we're actually going to focus for the directional bias on the 1 hour time frame, right? So let's do this 1 hour time frame. That's our directional bias. That's our higher time frame. We're going to look for direction. All right. So first off, just take a look at this, right? So we're going to look at this by going higher high, higher low, higher high, higher low, higher high, higher low, and then suddenly the market makes a lower high here, but we are still inside this structure here, right? Lower low. For the first time, we break and close below the previous higher low. Retracement back, make a new lower high, and then price started selling off. So this is a typical bullish formation. Well, a bullish structure that turns into a bearish structure. So let's have a look here. Right, so let's do this. Let's take a look. Just keep an eye on the candle bodies, right? All right. Break of structure, and then not any break of structure anymore. So now we're still looking at this as the most recent higher low. Break of structure on the other side, which is now called a market structure shift. This is called a market structure shift. So basically this is when the higher time frame changes direction. Market structure shift, or some other ICT students call it a change of character. CHOC. CHOCH. Right? Same thing. Same explanation. Basically. Price going from an uptrend to a downtrend. And we're going to continue this. Right. Lower low. Lower high. Lower low. Let's just do this. Right. Lower low. Lower high. Lower low. We make a higher high here. 100%. But what did we not do yet? We haven't closed below that high yet. So this can still be counted as a lower high here. And let's take a look at the Fibonacci retracement. We're going to explain more about the Fibonacci retracement in a moment. So let's just bear with me. So price basically do a 50% or 61.8% pullback, which is beautiful, and then start going down, right? So this is still a legitimate lower high in this formation. So here we break this low again, and now we break this high completely. We retrace, make a higher low, and then we started going up again. So basically from lower high to lower low to higher high, higher low, higher high. So our market structure shift is now here. So next up, I would just like to explain more about liquidity sweeps. So what is liquidity sweeps? So what is a liquidity? What is liquidity? Let me put it that way. Liquidity is basically orders that sit around highs and lows. So when price went up, suddenly started it started selling off here. So people started selling their stock basically, and then suddenly here people started buying stock, and then suddenly people started selling stock. So around these orders, around these highs and lows are candle wicks. Let's do this. Let's just for one moment delete this, since we're talking about liquidity. So what is liquidity? Liquidity is orders that are stuck at the highs and lows of turning points. Now, you're going to ask me, what is a turning point? A turning point is simply an up candle and then suddenly a down candle that then signals a change of direction for that brief moment in time. So here's a turning point, here's a turning point, here's a turning point, here's a turning point. Price started going up. Yes, there's a sell candle here, but did we close below that bullish candle? No, we did not. So this is not a turning point. This is basically just a continuation. So candle up, candle down, candle up, candle down. Yes, we closed below that bullish candle, so this is a turning point. You see? This is a turning point. 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 And around these turning points, this is where liquidity is sitting. Liquidity is basically buy orders and sell orders that still wants to be activated, like pending orders. For instance, people that still wanted to buy here, and then they put a pre-order in the market for once price get here again, then those orders can be activated. That is what liquidity is. Liquidity is basically orders that haven't been activated yet, orders that's sitting here, that's pending, that haven't been activated yet. And then suddenly, when price got to this location again, what happened? We started selling. And then when price started tapping into this liquidity here, what did price do? Price started going up. Price almost tapped this area and then started selling, but then suddenly made a breakthrough, went through these orders because it wanted to get to a different location. It wanted more. People started buying more of the stock, and they actually just want to get a better price before they started selling, right? Which eventually happened. So now there's orders stuck here, and when price went down here, now take a look at this here. So there's more orders stuck at this weeks as well. Price almost got here and then started going up again. And now there's more orders stuck here now. So now when price tried to turn around here, it actually just finally turned around there. And wouldn't you know, eventually, you see here, more orders came from here, started selling into here. These pending orders now are starting to get activated. Boom, price started going up and it failed to get to here. Price started going down again into this liquidity pool, back into this liquidity pool here. More orders got activated, pushing price up. And now price started going here. And now these sell orders that stuck in this liquidity pool here made that the price start going down again, right? So this is one form of liquidity. Price sitting stuck on the 1 hour time frame, on candle wicks, on turning points. These are liquidity areas, right? So this is one form of liquidity. The second form of liquidity is fair value gaps. Boom. Now suddenly the candle colors are changed, right? So what is fair value gaps? Fair value gap is a amount of orders that get stuck in the middle after a violent movement, like a very strong movement. Strong movement going down, strong movement going up, strong movement going down, and still strong movement going down, etc., etc. So, and then there's orders stuck here that haven't been executed yet, and then suddenly when price started going here, you see the answer I was looking for when price started going down here. What liquidity did price tap into before it started going down? If it didn't take this liquidity, what other type of liquidity did it take? The answer is liquidity that's sitting inside a fair value gap. That's it. That's the answer. Tapped into this liquidity, price started going down. Price started going up, tapped into this type of liquidity, price started going down, violently creating a very strong move to the downside. And then price tapped into this massive bullish fair value gap. Price started going up, price tapped into this fair value gap. And then price started going down. Boom, there we go. Continuation. And take a look here. So the liquidity is not only sitting at highs and lows of turning points, it also sits in fair value gaps that's created in the market with violent and strong movements that's been created. So yes, this is what is liquidity. Very, very short and sweet. All right, so let's move on to the next subject, which is the entry model. I'm going to literally keep it as short and sweet, guys, because this is exactly what I've been using for the past 3 weeks now to make a decent income out of trading. So let's move on. Let's move on to the next subject, which is what? The entry model. So let's get started with the entry model. So what is an entry model? An entry model is a combination of movements that gives you a signal to buy or sell in the market when you want to start buying in the market or when you want to sell in the market. Right? Simple as that. So what is our entry model? Now for this, I have to draw something to show you, right? Very simply, an entry model is something that we look on the lower time frame. You see, when we have our directional bias and when we can clearly see that the direction, let's take a look at this here. When we can clearly see prices starting to go up and we want to take a buy. So where do we normally want to take a buy? We want to take a buy inside the discount zone. Now what is the discount zone? The discount zone is basically when price goes into a specific area where the price is low enough for buyers to want to start buying. Because just take a look at it this way. What do buyers and sellers both want out of the market? Buyers want the best price that they can possibly take out of stock when they want to buy, and when sellers want to sell, they want the best possible price that they are willing to sell that stock for at the end of the day, right? So that's why I make use of a tool. This is one of the tools that I make use of. Basically, I make use of the tool called the Fibonacci retracement tool. Now, since price went down, price went up, the moment that price closed above the body of this 1 hour candle, if I do this and I draw a box now around this candle and this candle that broke, that where the structure have been broken, and I take this box down to the bottom, I'm going to ask yourself, what is the lowest point in this move? This is the lowest point in this move. And now I want to ask you, where is the next turning point? Here, right? So I'm going to basically make use of the replay tool because this is only going to make sense once I do this. Right? So here, price is going up. And if I know now, all right, price is bullish. So where am I going to find my entry in this buy? Let's move forward. Let's move forward. So I want to look for the best possible entry that I can find during this move up. So what I'm going to do is I'm going to take my Fibonacci retracement tool, and since I have seeing that this is the lowest point before this move went up, I'm going to start drawing my fib tool from the bottom to the top. And now you are going to sometimes move the Fibonacci tool even more when needed as price moves. So I'm going to look at this. I'm going to check and see, but where do I want to buy from? Now the answer is simply the bottom part of the Fibonacci tool. This is called the discount zone, right? So I don't want to buy here because we're still in premium. The price is still very high, right? So let's move forward. You see, price is now tapping into the liquidity, into the discount zone, which is also a liquidity for buy orders, right? Another form of liquidity. So now I'm wondering now, but where am I going to find my entry? And the answer is I'm going to find it on the lower time frame. So now that I am in the discount zone, now I can go to the lower time frame. All right. So now let's go to the lower time frame, 10th of March. Here we go. And that happens to be during the London session. All right. So now you will see that there's a Fibonacci tool that I've been drawing. So what am I looking for? Let me just quickly turn this down, turn this off. Oh, you'll also see that I have this on, which is not needed. I have a tool on which shows my session liquidity because I only want to trade during specific times, during the London session and the New York session. Right, so during the London session, price started going up. If this is the low and this is the high in the Fibonacci range, this is the area where I want to start looking for a buy. So what am I looking for? I'm first looking for a liquidity sweep or liquidity sweep, liquidity grab, right? So as I explained earlier, what is liquidity? Liquidity is basically sitting inside fair value gaps like this one. But since this one is not really inside the discount zone, we can actually look at this one here as well. There's another one on our fair value gap. So, and this is also price went up, price went down, price went up. So this is a turning point here as well on the 1 hour time frame. There we go. Boom, more liquidity. So we want price to first tap into that liquidity zone. Okay. Boom, there we go. Tapping into this liquidity zone. So now what are we waiting for? We are simply waiting for a market structure shift on the lower time frame. Here we can clearly see price went down, lower high, lower low, higher high, higher low, higher high, etc., etc. So, but currently, what is price now doing? Price is doing this. If you just take a look at this movement here, higher high, higher low, lower high, lower low, lower high. This is called micro structure, or basically fractal structure, right? So if I want to focus on a market structure shift on the lower time frame, you want to look at what was the most recent high that was created before we tapped into the liquidity. I think it is this one here because there's two bullish candles up instead of just one here sitting in here. But let's just move forward because we want to look for the entry now, right? Okay. Price started moving above this area here. So this could also technically be a high. that gets broken, right? So there's a market structure shift here. So if we have a market structure shift now on the lower time frame, what are we looking for? We're looking for a retracement on the lower time frame on the Fibonacci tool, or inside an FVG, which we get here. So we could actually take this buy here. And where is our stop loss going to be? The nearest low. That is literally the best stop loss that you can make use of here. So I'm going to take my long tool. Since we tapped into this liquidity after this high was broken, we can actually take our buy here. Or we can take a pending order. What are we going to aim for our trade? This high is too close because it's not even a one-to-one risk to reward. This one is a decent risk to reward. We can take it here. So this is the first entry that we can get, right? So what else? What is another entry that we can make use of? We can take our entry on the 45 or the 50% Fibonacci tool. From here we can take our stop loss here, and then still aim for that high, right? So let's move forward. Boom. There we go. Oh, we actually tapped this liquidity, right? There we go. What is this now? New York Open, right? So now we're going to get very interesting moves here. So let's move forward. We very nearly got stopped out. And then price started going up. Very, very close. Extremely close. But eventually we got our win. So this is the first type of buy idea I can give you guys. This is also this is literally an entry model and money management all in one, because I've shown you where you can put your stop loss. I've also shown you where you can put your take profit. You need to aim for at least 1.5 to 2 risk to reward for any of your trades. And you can also aim for the London session high for a trade like this, which is insane. There it goes. Boom. You could have aimed like this for your take profit as well. Absolutely insane. That was a beautiful, beautiful trade. Absolutely insane. Absolutely insane. Very nice trade. All right. So this is a buy order that you can make use of. And like I said, the highs that you use doesn't need to be very strong. It can be this high, it can be this high, etc., etc. Any of these highs you can make use of for a market structure shift. As long as we first have our liquidity sweep, which we got here from this 1 hour FVG, or this liquidity here, which is just simply a turning point, a wick on a 1 hour turning point. That's also a liquidity point, right? We tapped into that liquidity. We are still in the discount zone here between this low and this high. We tapped this liquidity, we got our entry, and price just went. That's all. It just went up. So this is a beautiful buy order example. So let's see if we can get an example for a sell order. So now that we have our orders for a sell, or a good example for a good example for a buy, now we can move on to look for a sell example, right? So first, before we take a look for an example for a sell, we first must need the market to change, right? So unless if it stays bullish like this, for instance, where's our break of structure? Here it is. So where do we draw our Fibonacci tool? which was the low before this high was taken here. This one, that low, right? Draw our Fibonacci tool here. All right, let's move forward. Let's see where price is going to retrace into. Oh, let's just move our Fibonacci tool a little bit higher. All right. Boom, there we go. There we go. Very nice. So what liquidity was taken here, by the way? The only liquidity that I can see was taken here is obviously we are already inside the discount zone on the Fibonacci, right? So here we can clearly start looking for a buy while we are still bullish. But I'm asking you what liquidity was taken, right? So we get two forms of liquidity. Wicks, 1 hour wicks, which we get here because price went up, price went down. As you can see here, this is a bearish candle and price is going up. So this is a legitimate point, turning point here. That liquidity was taken. Now we are waiting for a what? We are waiting for a market structure shift. Now this in its own here, price starting to go lower, lower low, lower high, lower low, lower high, lower low, higher high. And then after going up here, this area is basically still activated as a area where you can start looking for a buy. You can actually either enter the buy here, take your stop loss here, and then just aim for the skies for your take profit, or you can wait for the 5-minute lower structure to start making a market structure shift, retrace, buy. That's up to you. Let's see what the price does next. Right, let's move forward. Okay, we can actually count this as a liquidity grab here for the bottom. Yes. All right, so lower high, lower low in some form. We're waiting for a structure shift. Oh, yeah, now we're definitely waiting for a structure shift. All right, so let's see. Okay, now price is starting to go up. So we're already inside this liquidity pool here. We actually tapped this liquidity pool now, which is what? Which is the turning point wicks here. Interesting, right? So we take this. Okay, that is your liquidity. Boom, we tapped into that. What's the nearest high? Before we took this liquidity, that would be either this one or this one. Boom, I'll take that one. No worries. Okay, let's wait for it. And now we're in Asian session. Sorry, I don't trade in Asian session. I'm sorry. But if you would have traded in Asian session, you can clearly see here was another break of structure, which means that this now becomes the new high of interest. This is now our market structure shift. So what are we waiting for? We're waiting for a retracement. Let's see if we get that retracement and how far we're getting that retracement. We need to adjust our Fibonacci tool as price goes along. You see, I do not trade in Asian session. I hate this structure with a passion. I hate it, absolutely hate it. All right. We are still bullish at this point in time because we haven't closed below that 1 hour turning point there. You see that body of that turning point? We haven't closed below that. Yes, we tapped into it for liquidity and started going up clearly. As you can see, you could have entered a buy here as well. But at the end of the day, that's not the entry model. The entry model is what exactly? Take a look here. Higher high, higher low, lower high, lower low, lower high, lower low, higher high. This is your market structure shift here. Retracement of some sort, either 50% or into a fair value gap. And then boom, there is your trade entry for a buy, and you aim for the skies, wherever the previous highs you are targeting, right? So what are we first waiting for? We got this. We got that, but we haven't got what exactly? We haven't gotten our retracement here yet. So like I said, lower high. So lower low, higher high. We haven't gotten any retracement whatsoever. So, but we are also in the Asian session. I don't like trading in Asian session. I only like trading in London and New York session. That's it. That's literally it. So I'm not going to focus on this buy anymore. I'm going to move on with my life. Right. Let's move forward. We eventually got our retracement, but it's too late. We're inside the Asian session, right? Let's just move forward as fast as possible. We tap into this liquidity again here. We're actually tapping into this turning point here as well. See, tapping this liquidity again. Now we're in the London session. We're tapping this liquidity here. So if we want to look for a buy, what are we waiting for? We're waiting for a market structure shift. Here we want to, what is the latest high? This one here. So at this point in time, the 1 hour time frame is still bullish because we haven't closed below that low yet, right? So now let's wait for it. What's happening now? This is a good example, right? So what's happening now? Now we're starting to close below that low. So now I'm asking you, since we have now broken below that low, what are we now on the higher time frame? The 1 hour time frame. We are now bearish 100%, right? Because we closed with a body candle below the previous higher low. So now this is a lower low, and this is now our higher lower high. Let me put it that way. This is now our lower high. So now we can actually do this. Now we're going to take our Fibonacci tool. Instead of looking for buys, what are we looking for? A sell. Now we're looking for a sell. Whoops. All right. Looking for a sell. And what are we looking for in a sell? So before we want to go into an entry on a sell, what are we looking for? We are looking for price going up, higher low, higher high, higher low, higher high. We're waiting for a market structure shift, lower low, lower high, retracement into a fair value gap or a 50% fib retracement, and we take our entry here and we aim for whatever lows were created here on the left hand side as our target. All right. So now firstly, we want price to retrace up, which it did. Beautiful. Right here, 50 and 61.8% retracement. And what are we also retracing into? Let's see if we have any liquidity. Yes, there's one candle here, but we have a better liquidity form here. And here, these candle wicks, this turning point here. So we can actually extend this liquidity pool to here. All right, cool. This is our liquidity pool. Now we wait. Price tap into it. You see that? So what low do we want to be broken now before we look for a sell? I would say this one here, because price went up, price went down, 2 candles, price went up. So we can take a look at price close below this, retracement, and sell. Boom, there we go. That's our answer. So let's wait. Boom, there we go. Right. Immediately, now we take our Fibonacci tool. Right. We're going to adjust it as price moves along. We got immediate entry. Immediate entry. We can take our entry here. Take your stop loss here. Aim for this low. At least. At least. Let's do this. Let's move forward. Ooh, we nearly got stopped out. And we did get stopped out. All right, cool. This was a legitimate sell entry, but we are still bearish. So we can actually, since price is tapping into this liquidity pool, we can actually take another entry. So I know we got stopped out here, but we are still bearish, 100%. All right. Still tapping into this liquidity pool. Now there's a New York session open. Tapping into this liquidity. Now we are waiting. Okay, now we take more liquidity. There we go. There we go. Beautiful. Beautiful. Absolutely beautiful, right? We tapped into this liquidity as well. So even more liquidity tapped. So what now? Now we are waiting for price to close below this. Higher low. Let's wait. Boom. There we go. What are we waiting for now? Now we're simply waiting for a Fibonacci retracement and entry for sell. Boom. Let's put entry there. Stop loss. Take profit here. Let's wait. Yo, that was close. Very close. We nearly tapped it. There we go. There we go. Okay, we're in the trade. We're in the trade, right? Let's wait for it. And boom. There we go. Take profit. Take profit it. Absolutely beautiful. Absolutely beautiful. 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 Price started playing around here, which is fine. We took our profit. So we ended that day with 1 stop loss and 1 take profit, which is perfectly fine. Because if you get stopped out, remember this was a mechanical way of looking at this trade, right? So at the end of the day, you need to be open-minded. Just keep your head above your shoulders. We know that the 1 hour structure is bearish and we're going to look for a sell. So let's basically look for another sell example, right? Let's look for another sell example. So since we're done with this New York session, now we want to move along. Let's just remove all the clutter for the time being, right? Okay, let's move. I'm going to do this. I'm going to strictly look at price structure with the replay tool, because this is how I look live at the trades at the end of the day. Yeah, you see, this is the start of a very nice bearish movement. Take a look at this. Insane, right? But you can only look for so much during a specific session. So, right, that's fine. Let's move forward. Just keep an eye on the 1 hour time frame, right? So what's the liquidity that we want to look for when price goes down so fast? Fair value gap liquidity, right? At this stage, at this point in time. Now let's move. We are still in Asian session. Still in Asian session. All right, what is this line now? Let's just put it out of the way for now. We're very close to London Open. Right, we have London Open. And what did I explain? What liquidity are we looking for? We are looking for fair value gap liquidity. So here's a fair value gap. Here's a fair value gap. We've already tapped this fair value gap and we've respected it. So it's still part of this liquidity pool. We can extend this here. This whole area is a liquidity pool. We tap into this liquidity pool. Boom, there we go. Now we are waiting for a break of structure. I would say going up. Yes, we could count this as a low. We could. Let's wait for break of structure. Okay, just keep an eye on this lower time frame, right? Just keep an eye on it. Up, we create a new high here, and this is now our low of interest. We are still bearish. Just keep this in mind. We're still bearish. Why? Because there is our low that has been broken. Whoops. Right, let's do this. There's our low that has been broken. And since we've broken this low, what is our new high? This. Right, so what do we do now? We adjust our higher time frame from Fibonacci to, yeah, there we go. Cool. We got our retracement into the 45%, and we would really like to get a tap of the 50% retracement. If we can't get that, it's not the end of the world. You see? Not the end of the world. Not the end of the world. Really? Right. That's still our low to be broken before we start looking for a sell. Alright, now we break that high. We actually, and since we broke this high, this is now the new low that can be used. Right? This low, we already closed below it. What are we waiting for now? Simply a retracement of either 50% or 45%. Whoa. Very close. Unfortunately, we did not get our retracement. But price did start going down again, right? So if you want to catch the continuation of this move, you can as well. Just keep an eye. See, we didn't catch this. I wish we could. It tapped the 45 or 50% retracement when it got here. I really, really wish it would. It would have done this, because then we would have had our entry here. We could have sold. Right. Let's do this. Nothing we can do about it. We did get our market structure shift. We actually also got the market structure shift here as well. There we go. See? We broke this high here, and then we started breaking this low. All right, cool. New plan of action. We take our Fib tool. We keep moving it because that is legitimately still the latest high. We're waiting for a retracement. Probably going to get it during New York open. Let's see. Boom. We got it. There we go. I would have drawn my Fib tool from the 45% to here. That's legitimately the high. And I would have aimed for what low? This low. Here. Yes, there we go. Boom. 45%. And boom. Just like that. Beautiful. Absolutely beautiful. Beautiful, beautiful, beautiful. You see? Absolutely beautiful. How did I know that we were going to look for a bigger retracement here? How did I do that? Because I used my eyes here. This is all internal structure. Remember when I told you earlier when we struggled with internal structure here? Like price went up here and then broke this low suddenly, right? And then what did price do? Why did price go up so hard? Why? Why on the 1 hour time frame did we go so high up here to take out this high? Why? because this was not the legitimate high of this first break of structure. If I were to ask you, what was the first actual break of structure of this 1 hour move? Did we close below this low here when price moved down? No, we did not. We created some form of a high here, and then this is the first time that we close below this low. Now we have a proper market structure shift. Now we're getting our first retracement. Now we're getting our first sell off. You see? Break of structure. And then what? Price didn't close below yet. Price didn't close below yet. Finally, price closed below here. So what if we were to draw our Fibonacci tool here now? What was the last high before break of structure? That. Now we draw our Fibonacci tool down here to this low. Price started going up. Boom. Sell off. So we were perfectly fine respecting the 61.8% level on the 1 hour time frame with a very big wick. We take more liquidity, and boom, then we started selling off. Because why? This was the first valid break of market structure shift that 1 hour got before it started selling off. So now I'm asking you again, why did we want a bigger retracement here? Because this was the first time on the lower time frame that we got a market structure shift. This is manipulation. Price started going up. Take some more liquidity. First time closing below. Now we have a break of structure. We didn't have a big pullback yet. Price started going here. Boom. And then sell off. This is the first 50% retracement that we got. 45%, 50%, whatever. Got here. Entry. Sell off. So yeah, this is the perfect sell example. Absolutely beautiful. Absolutely beautiful. This takes a lot of patience, but if you get this correct, and if you use the liquidity correct on the 1 hour time frame, you see a lot of retracement tools here that I make use of, but with good reason, so that the market, even if it wants to manipulate us like this, we still have our wits about us, our knowledge of where do people buy or sell the most, right? So they always sell from premium, which is the top part of the Fibonacci tool, the top 50%. You see? And we always buy from discount, which is the bottom part of the Fibonacci tool. Let's take a look at this. Let's take this as an example. So yes, we've broken this low. Where is the first time that we broke this high? Here, price started retracing, going up. So let me show you discount again. So we take this Fib tool from this bottom to this high here. Price started retracing into the bottom 50% of the Fibonacci tool, and then started going up. So our entry, if this was London session, you see this is Asian session. If this was London session, I would have waited for first what? Liquidity grab, which is probably this area here. There's our liquidity grab. Now I'm going to wait for market structure shift, retrace, buy. Boom, there we go. So I really hope that this explanation that I've given you, I've shown you plenty of examples, buy and sell examples on the charts, and shown you structure and shown you liquidity areas that you can make use of, because this is legitimately the model that I've been using for my trading strategy. 100%. Nothing else, nothing less, just this. That's it. That's literally it. And if you want me to make another video regarding 1 hour time frame bias, because this is a very important one, because without this direction, if you wanted to buy when price is legitimately going down, you're going to get stopped out here, you're going to get stopped out here, you're going to get stopped out here. Price, yeah, obviously price started going up here, but if your direction says buy, you're going to get stopped out here, 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 and then price started going up. Because why? Because your directional bias is not 100% correct. I'm sorry, there's no other way of explaining this. Because if you take a look at the 1 hour highs and lows, the 1 hour clearly started going into a specific direction. And then, if you know that your directional bias is now not correct, and you want to go into you want to trade in the right direction, in brackets, because there's no right or wrong in trading overall, but there's only your experience of the market. And experience of the market is built upon what happened in history. And history explains if price makes lower highs, higher highs, and higher lows, we are in an uptrend. If price makes lower highs and lower lows, price is in a what? Downtrend. That's it. That's what you can base your bias on. That's seriously it. There's nothing else that I can show you otherwise. There's literally nothing else I can show you otherwise. As you can see, here is the beginning of the video when I try to explain to you what is bias. And this is exactly what's happened in the history of NAS 100, right? So that's literally it. There's literally nothing else difficult about this. So yes, I'm going to probably make some more examples in the future as I go along. But this is literally the easiest way that I can explain this to you guys. Literally the easiest way. So I really hope you enjoyed this as much as I enjoyed creating this for you guys. And yeah, that's it. If there's any questions, you know where to find me. All right. Thank you so much. Cheers.